Chinese officials unveiled today what some say is the government's most drastic attempt to support the country's troubled property sector. And Roland Lim from CNA's business desk has more. So, Roland, tell us more about these so-called historic steps.
Well, China has certainly revealed some of its strongest policies yet to help prop up the crisis-hit property market. Now, the measures come as April housing data showed that early efforts were not paying off. The central bank has effectively scrapped the nationwide minimum mortgage interest rate, and minimum down payment ratios will also be reduced for individual home buyers. First-timers will need to put down 15% from 20% previously, while those looking for a second home may pay 25% instead of 30%. Now, Beijing also urged local governments to buy homes at quote-unquote reasonable prices and to get them turned into affordable housing. Property names listed in Hong Kong got a huge boost on the news. Sunac China jumping the most percentage-wise today and is at its highest level in more than 5 months. Longfor Group also putting on its best showing since November. China Wanke adding close to 20%. Now, those listed on the mainland also surged. Top developers on the CSI 300 real estate index jumped more than 9%, and that helped the broader markets, both the Shanghai Composite and the Shenzhen component, higher by more than 1% today. Now, for more on this, we're joined now by CNA's Olivia Seong live from Beijing alongside our guest, Rosalia Yao. She is the China property analyst at GraphCal Dragonomics. Welcome, both of you. Olivia, let's start with you first. Now, Chinese officials held a press conference on the measures just released. What sort of message are they sending to the sector?
Roland, I think it's a pretty clear signal that the Chinese authorities are moving with greater urgency and greater force to try to stabilize its property market that has been troubled. These woes going on since 2021 after the government tried to introduce some regulatory measures to rein in the high level of debt seen among developers. And this move has not been a huge surprise. We had heard signals that the government was going to act following that top-level Communist Party Politburo meeting just last month. Also, analysts I have spoken to say that, this is also as a result of there being previous measures having been introduced. We saw many cities remove restrictions on buying homes. Also, on the supply side, there is that white list for developers to get financing, but that has all had limited impact. And besides those new measures that address the financing policy, which observers tell me is the most relaxed that they have seen financing policy and is as relaxed as it can get. We also saw the Chinese Vice Premier's economic czar, He Lifeng, talk about encouraging local governments and state-owned enterprises to buy housing, unsold housing in cities in order to be used as affordable housing, in other words, to rent out or sell. But whether or not this is effective is another question. Roland.
Rosalia, the moves were not unexpected, but they were a long time coming. The underlying reason would be to, would you say, shore up home buying confidence? I mean, is this the best remedy going forward for the property market?
Yeah, the reason for this big rescue package is that the measures has been introduced since late last year, basically failed. So as you mentioned earlier, that April data basically suggesting a deterioration of the market sales and the prices. So the policymakers are really worried, and I believe they definitely want to shore up the sector, because that's a very important part of the economy, vital to the ordinary people's life.
Olivia, how have the home buyers reacted to the news? I mean, do you think that they will likely be more reluctant to buy at this stage when prices could potentially be lower in the near future?
Roland, that could be one of the scenarios, people waiting for prices to fall even further. One observer even told me that could be the scenario that people are in fact more keen to sell their homes than buy, which could then exacerbate the situation as we could then see more housing supply in the market. And this hesitance that we are seeing among potential home buyers, we saw online, there's a lot of buzz that has been generated. The announcements after they were made, the topics of these new measures shooting to the top of the trending list online. We saw some people also joking about that reduction in the down payment ratio. Some netizens say, it's not the down payment that they are having a problem with, but it's the rest of the payment for the rest of the house that they are concerned about. Also, with that other key measure with regard to getting local governments and state-owned enterprises to buy unsold housing, observers have said that local governments would not be able to afford that, as we know that local debt is of concern as well. But we saw officials today address that. They say that they will provide a $42 billion fund as loans to encourage this initiative. But the other concern, though, is that while this may work for bigger cities where the location is good, in the smaller cities, this may not be as appealing for people to rent or buy these homes that are even sold as affordable housing. And so, Rosalie, I have a question for you. It seems like these are measures for the short term, but can they address long-term issues, given that we have also seen officials repeat that real estate developers that need to go bankrupt should go bankrupt, those that need to restructure should restructure? Does this mean that we would possibly see more measures being announced by the government down the road?
Yeah, thank you for this question. So my view is that, as I said, the policymakers make it very, very clear that this sector is very important for the whole economy, for the ordinary people's life. So in that, the policymakers will do whatever they could to turn around the market. And yes, as you mentioned, in smaller cities, supply is abundant. But there are always demand for upgrading housing. And I don't think people do not have that demand because the price is not good enough. And the government purchase actually is a strong signal that there is a floor for prices on one hand. On the second hand, the government policymakers are no longer just on the opposite of bad developers. They are also part of the whole sector or whole economy. So that is a message to the home buyers that government is on board. The home buyers are more likely to follow.
Rosalie, home buyers aside, where does that leave the private developers that don't actually have access to state funding? I mean, we've already seen some of the biggest having triggered defaults on its debt and are facing liquidation. I mean, the likes of China Evergrande or Country Garden.
The biggest problem so far, as you mentioned, this whitelist, project-based whitelist financing mechanism, it's not working as planned. It's mainly because there is very little sales. And the government-led purchase could be so as a catalyst for more sales. And more home buyers are expected to follow suit. Therefore, the banks could have, could do their due diligence and could justify their lending. Therefore, developers' financing can be maintained. And from Premier He Lifeng's statement, he says the purchase of idle land or the empty housing, unsold housing, would be a way to ease developers' financing pressure.
Rosalie, thank you for those insights. That was Rosalie Yao, China property analyst at GraphCal Dragonomics, and of course, our very own Olivia Seung.